started. So, why insurance is important in our lives? Many of us must be already aware of insurance in day to day life, but a few of us are not. So, today's Skillify session is more focusing on to have a life or term or general insurance in our lives. As we know very well that our lives are full of uncertainties. Every day we are facing challenges in different forms, sometimes in accidental form, sometimes in sudden death, sometimes damages occur. Like in today's scenario, we can take like pandemic situation. We have lost our near and dear ones and face the financial crisis and their presence. So how insurance create impact in our lives? Actually, it gives protection us and gives protection to our family members. It also helps in reducing the stress during the difficult times. And you also can enjoy the financial security when any emergency arises. And it also gives you the peace of mind. And one more thing, and as a legacy to leave behind for your children and protect their standard of, living and surviving. So there are many reasons present to buy insurance in our lives. Now let's move to the next slide that talks about the life and non-life insurance. As the name implies, life is for the human being and non life is for the materialistic thing or the physical things. So, life insurance provides a lump sum amount of sum assured at the time of maturity or in case of the death of the policy holder. And non-policy or non-insurance policy insurance you can take when any you need financial protection to a person or for health issues or losses due to the damages to an asset. Basically, life insurance is for persons and non-life insurance is for the health problems, critical illnesses, car, house, and businesses. Now, coming to the next slide that talks about what is life insurance is about. Life insurance is a kind of contract between an insurer and a policy owner, and it guarantees the insurer pays a sum of money to named beneficiaries when the insurer dies and in exchange for the premiums paid by the policy holder for their lifetime. So it gives the various benefits to the insured person or to the policy holder, like it provides the life cover. What does it mean? It pays a lump sum amount of money when the insured person dies, and the money goes to the people you want to nominate as beneficiaries. So someone who will, in the family will receive a benefit or asset in the event of the owner's death. Another benefit you can get if you have any policy, you can have the tax benefits, you can have financial benefits, you also can secure future, and definitely it will give you peace of mind and great return on your investment. Now coming to the next slide that talks about the types of life insurance policy. What are the different aspects of life insurance policies once you go to the market or once you go to the insurance company to have any insurance plan? So before discussing the term insurance, I would like to let you know the various types of life insurance plans. And I would like to go with the first one, that is the whole life insurance. So whole life insurance is a type of permanent life insurance plan, and which means the insured person is covered for the duration of their life as long as premiums are paid on time, right? And coming to the second one, that is the endowment policy. So if you have such policy, so that sort of policy is a life insurance contract designed to pay a lump sum after a specific term on its maturity or on the death of the insured person. So typical maturities are for 10 years, or for 15 years, or for 20 years, and up to a certain limit you can get it. And some policies also pay out in this case of critical illnesses. So just to give you an example, if you pay an annual premium of rupees like 20,000, you are paying up. Then it is for annually under any endowment plan. So you can have a sum assured approximately, or I can say tentatively, around 16 to 30 years, 16 lakhs, right, for approximately 30 to 35 years. So that is the endowment plan you can take into the consideration. Now coming to the next one, that talks about the money back plans or the cash back plans. So money back policies, how does it help? It helps in providing the benefits of an insurance policies as well as an investment, ensuring that the policy earns the policyholder an income instead of just merely providing a lump sum in case of his or demise. So these plans offer a guaranteed return on investment as well as a periodic payouts and insurance cover, and it making it an ideal plan for individuals. So looking for both protection as well as source of income in the money back plans. Now coming to the third one, that is the child plans. Sorry, next one is the child plans. So child plans are the insurance come investment plans here, we can say, and that helps in that helps as an individual person create a corpus for children's future over a period of time or the policy term period, right? And maturity, these plans pay a lump sum amount which can be used to pay your child's college fees or marriage expenses. So such type of policy you also can have for your children. Now coming to the annuity plans, it is a plan that helps you to get a regular payment for life after making a lump sum payment or investment. So the life insurance company invests the money of the investor and pays back the returns generated from it. Another one is the unit linked insurance policy. These plans offer a combination of insurance and investment payouts. So ULIP policy holders must make regular premium payments. And in this, they will be covered both the insurance coverage and the investment. So ULIPs are required or frequently used to provide a range of payouts to their beneficiaries for when they face to the death. Now coming to the term insurance. So term insurance is a type of life insurance where the insurer provide coverage for a certain term, right? And in exchange for a specific premium paid over a period of time. So, in any case, if insured person dies during the term period specified in the policy, so a death benefit is paid to the family of the insured person. So this was about the term insurance, and now I'm going to discuss like how does age affect your health insurance premium. Like at the time of getting the policy, so age matters. So how does it affect on the premium value? So once you start opting any plan, you will find the premium in different forms. Actually it's not fixed as per the person age, right? And the more you grow, or the more you grow older, you will be charged by a higher amount. Why is it so? Here are many factors by which you can understand you know why a person is getting charged higher on the basis of age, on the basis of his habits, or it is it is if he's living in any city, or if he or she is having any pre-existing illnesses. So I would like to start with the age. As you can see in the slides, these are the five most important factors that determine health insurance premium. Age, first one is age. So as you grow older, you become more prone towards illnesses, and hence the medical expenses are much more. So the health insurance company will have to cover this risk, and that is why you are charged more. So this is true for all insurance companies in health insurance, unlike term insurance. Mediclaim premiums do not remain the same throughout the policy tenure. It might be the same between 18 to 35, but then once you move into 36 to 45 or more than 45, your medical insurance premium will also go up definitely. And if you have smoking habit, or use a habit of using tobacco, So it also matters at the time of charging the premium value. So health insurance is sold in good faith always, and it is always expected from the insurer person side that once they will declare voluntarily if they are using tobacco, or they are not using tobacco, or any smoking things if they are not having. So and at that time premium matters. If the insurance company finds out about it later about your habits, then the policy might get cancelled or rejected. So if any person used to do smoke, then he has to pay more, as it raises the chances of fatal diseases like heart problems, like kidney problems, like asthma, and also sometimes cancer. So if smoking habit is beyond the limit of approximately like more than 10 cigarettes if you consume in a day, so some health insurance companies, they might deny the policy to give you. And the others, they can charge the other charges in the healthcare premiums because you are having the smoking habits or tobacco habits. Now coming to the next one, that is the individual policy or floater policy. So, a floater policy provides health insurance covers to the entire family. And since it covers more than one person, the chances of hospitalization also increases. And health insurance companies will cover these expenses, so the premium amount is also more in that case. Now, coming to the next one, that is the pre existing illnesses. So if you have pre-existing illnesses during during the finalization of your premium, or finalization of policy, so the risk of hospitalization and medical expenses are more, and the medical insurance company will have to cover the risk. But different health insurance companies deal with pre-existing illnesses differently in different ways. So some put a waiting period, some put a co-payment condition for it if you have pre-existing illnesses, while some increases the medical insurance premium, or it can be both depending upon the situation. So it is advisable to a person, or to the person who is going to take the policy, if you have any pre-existing illnesses, then declare them while purchasing the policy. If it is discovered by the health insurance companies later or during the treatment, then the claim might get rejected. So this is again, we can say, the part of the finalization of premium value. Now coming to the last one, that is the city. So city also matters wherever you are living. So the medical expenses are different in different cities. Like for example, the hospitalization expenses for cities like Delhi, like Mumbai, and like other metro cities, right, where you will find there are more chances to get an accident. So medical policy premium amount will also be more in such cities. So these are the major reasons by which premium affects person to person. So this was all for today, and I would like to suggest to the youngsters, to the to the young people, to have at least an insurance plan, as they are young, they are energetic, they are less prone to the disease, right? And due to this, premium would be less, of course, for them, and they can enjoy maximum benefits. That's all for today's session. Thank you very much.